Hello traders and welcome to another video review. Today is Wednesday, May 7th, 2025. Let's take a look what's going on the economic calendar for today. So this is the Wednesday and it's all about the Fed. So you might forget about all of the other data releases because the key event of today is the Fed interest rate decision, FOMC statement and press conference scheduled for release at 8 o'clock and then 8:30. Occasionally, crude oil inventories from the US scheduled for release at 4:30 might spike some volatility on the crude oil. Nevertheless, this is the day that everyone is talking about, that everyone has been waiting for. Fed interest rate decision today at 8 o'clock. The market participants expect the Fed to keep the interest rate at the level of 4.50. So today analysis will be all about the Fed and the US dollar. So let's start the analysis. We are going to do with the euro dollar first. So the euro dollar 4-hour time frame chart. Now we know why this chart is so strange looking, because we've been developing this sideways movement since the top at 1.1574 as the market participants simply waiting for the Fed to indicate what is about to do, whether it will hike the interest rate or cut the interest rate. From the technical point of view, the wave 4 is in progress, still in progress, and there is still wave 5 to the upside that is waiting for the to unfold, basically, right, in this situation. So when we are done with the wave 4, wave 5 should be develop. Maybe this is why the volatility is so low. The market keeps trading above this technical support 1.1268, below the technical resistance 1.1435, because the market participants are waiting the interest rate decision. In case of the interest rate cut, in order to make the economy, US economy, better, the situation will be very, very simple. The market will sell the euro and buy the dollar, because the dollar will be cheaper than the euro. So we should see spike down. If the market, if the Fed leaves the interest rate at the level of 4.5%, or if there is a hike, then the market will buy the euro and sell the dollar all around, all across the board, right? So those are the two scenarios here on the euro dollar. Let's take a look at the US dollar index. The US dollar index on a 4-hour time frame chart is again trading up around the 100 periods moving average. So if we place our technical support, obviously 97.89. This is from the April. This is the technical support from the April. And that's the one thing. The other thing is, of course, the technical resistance at 101.24. Right, and you can see that the market keeps staying below this level. It keeps staying below the this level here, 100.36. So that's another technical resistance. Volatility is very low, as you can see, because the market is coming down from the extremely overbought conditions on the momentum. And if we look back to the beginning of the year, let me just look back to the beginning, maybe February. This is the 2025. Since 2025, we have a consecutive lower highs, lower lows, which is by definition downtrend, basically, right? So the US dollar index is in the downtrend, and it doesn't actually look like something is going to change. So in case of the rate cut, there might be some reaction to the upside, but it should not be. It should be temporary only. But in the case of the rate hike, we should see another spike to the downside and euro dollar going up. So that's the situation with the US dollar index. Gold. Well, gold yesterday moved lower from 3,437 after very nice movement from the lows of the wave C, 3,201. Bearish engulfing pattern has been produced, so let me just mark this level here as the technical resistance, obviously. Okay, and now we are testing the wave B high, which is now the technical support 3,370. Any breakout or bounce from this level would directly put the all-time high at 3,000, let's say 500, up for a test. Right, so if the gold would rally after the Fed decision, then the US dollar must be way stronger than it is right now. So that there must be some sort of the rate hike. Okay, so if there is a hike, then the gold will move higher. If not, there is a possibility of moving lower. Let's take a look at the S&P 500 because this market is again very close to the key technical zone. Let me just place my maybe my rectangle. There you go. I'm looking for the rectangle. Let me just place the rectangle here so you can see the zone by yourself. Basically, this is the supply zone. Obviously, it's supply zone. And as long as we trade below this zone, the outlook should remain bearish. However, there is a very nice effort from the bulls to pushing this market from the lows of 4,800 back towards 5,700. So very nice, almost 1,000 points rally here, right? But now it looks like the market might stay above this level, the level of 5,700, and break above 5,800, which is the upper level for the zone, only in case of the interest rate cut, right? Because then the market will see there is a risk on environment, which is most likely very it's like a stimulation for the stocks, right? So in that situation, we should see movement to the upside very soon. And last but not least, let's talk about the crypto. Yesterday, very nice spike because of some of the, they say at the market that some of the states legalized the crypto reserve as a legal one, and they will obviously need to get some reserve of Bitcoin from somewhere, most likely from the market, which is why the price jumped straight on. We still are below the May 2nd high at 97,860, but it looks like it's just a matter of time we break above this level and test the 100,000 level again. So that's a quite good situation for the Bitcoin. Let's wait for the interest rate decision. Remember that there is a very high correlation between Bitcoin and the American stock markets, S&P 500 and Nasdaq. So if they go up, Bitcoin will go up most likely as well. So let's wait for the interest rate decision. Remember today 8 o'clock the FOMC will reveal the decision. And 30 minutes later, we got the FOMC press conference as well. So it's rather recommended to watch it as well, because some interesting questions might be asked to the Fed officials. Anyway, we will see very soon how the market will react on the news. For now, it's everything from me. Thank you very much for watching this analysis, and I hope we are going to meet tomorrow yet again. Take care and bye-bye.